And welcome to the VSA Capital Tech and Transitional Energy Podcast. And I'm back, Andrew Monk, the Chief Executive of VSA Capital. I'm back from my trips to Cornwall and South Africa. Phil, did you miss me?
Look, of course I did. Of course I did. It's just not been the same, Andrew.
What the bloody hell did you do with the markets, though? They're all falling out of bed.
Yeah, I was just going to say, no, they really are.
Is this going to get the label of the crash of 22 in the same way that we've had, the crashes of 87 and various things like that? I'm going back a bit in my old age, but, it's pretty grim. It is pretty grim out there. And look, the only thing is, it's grim. You can understand why it's grim. We've obviously got the Ukraine war, the zero COVID China policy, which is disrupting supply chains, etc. Inflation at 9%, interest rates going up. A consumer squeeze like there's no tomorrow. I mean, the list is endless, but we do know all about it. So in a way, it should be factored in. It clearly isn't, because the market's down 180 today. And we saw big slides in America last night and Asia this morning. But, there's the what if. What if one of those negative things was removed, which it could be? Does the market then go better? I don't know. Anybody who's got a view, feel free to direct message us.
Yeah.
What I do know is this. I'll tell you what, I'm going to interrupt you again. What I do know is this, right? If we look at something like the dot-com bubble, all right, I remember at the time I was broking ARM very aggressively. I was the broker at ARM. I floated them in London in the first place, actually. They actually floated on NASDAQ first. I then dual listed them in London. And I do remember, actually, they were on a P of about 500 at the top of the dot-com bubble. And I remember trying to claim that it was a new paradigm. That there never is a new paradigm. The PE was absurdly high. So, of course, the stock had to come back. And it did. It came whizzing back. But actually, and I did own them, and I still owned them when they came whizzing back. And I still owned them, though, when they then went whizzing back up again. And actually, a good company, as long as you can hold it through a crash and hold it longer term, actually will outperform and will go back to higher levels. So we shouldn't panic, is the answer. Don't go running behind the sofa. Just turn your screens off, go out and sit in the garden for the summer and come back, and all will be fine.
I think there's a lot in that, Andrew, because I remember post the Lehman's crash, covering a number of industrials companies in the FTSE 250 that had terrific global brands, great customer bases, and you knew that when the economy turned and things turned, they would certainly be benefiting. And those share prices all came back, and boy, did they come back. So that's some good advice there.
And the other thing is, right, the money hasn't actually gone away. It hasn't gone away because governments around the world just keep printing it. It's just moved out of equities. But there's still money around the world. And the sort of thing we're going to start to see now is what we've seen in Vodafone, which is where an Emirati shareholder has come in and bought 10%. And I think if you see stock prices falling too much, you're going to see a lot more of that. And so, again, just bear that in mind when you're looking at your portfolio. If something's fallen too far, just think, hang on a second, there's somebody going to come and take a stake, somebody going to take it over. There's no question that there's going to be a lot of M&A activity in the next 18 months.
Yeah. Oh, yeah. Yeah.
I don't know. What do you think of the Vodafone? We've been talking about it a lot for the last, ever since we started this podcast, I suppose 18 months ago, saying that we quite like to sort of revival of the telecoms industries. Vodafone actually hasn't, it's got very stuck in a range of sort of, 120 to 140 sort of thing, a very tight range, going a bit sideways. What do you think of that deal, Phil?
Well, having changed mobile phone provider, I mean, look, you could change. It's not always the smoothest of processes, but once you've got a good provider and used to it, you're pretty unwilling to change back. There's a good degree of stickiness in the business. And my provider, who remain unnamed, has been putting their prices up, but actually the prices were so good in the first place. You're thinking, well, that's quite bearable. So there's a decent element of stickiness in these businesses. Whereas if you're, a retailer or you've got certain retail products, you might want to switch to something that's a lot cheaper the next week when you go and buy it. it's easier to do. So,
do you think you're on Blue Peter or something? You can't name what the sticky back plastic is or whatever, it was complicated.
Yeah, well, all right then, there you go. I'm with Virgin Media, my mobile, and their network is provided by Vodafone, Andrew, and it's very good.
Very good. Look, I actually think, whenever I would be a buyer of Vodafone. At the end of the day, look, you've got these guys coming in buying 10%. According to my screen here, it's yielding 6.5%. It's a 30 billion market cap company. Mobile phones aren't going away. What's the bloody downside?
And it's throwing off plenty of free cash.
Correct. So actually, I'd be a buyer. I'd join in with the Emiratis and I would buy Vodafone. There you go. There's a view for you. Now, we're just talking about things falling out of bed and craziness. One of the crazy things I want to just point out to you is that if you remember a year ago, everybody was jumping up and down and saying, we've got to change the rules in London. We've got to allow SPACs to be floated. Look, everyone's doing SPACs. We're missing out on a trick or two. Luckily, the sensible people didn't join in with the idiots who were sort of pleading that we should change the rules, because SPACs in the US have absolutely tumbled. The one I've been watching is EOS. I watch it because it's in long duration energy storage, and it was one of those things that everyone was saying, look, aren't they brilliant? Aren't they brilliant? And obviously we'll come on to the fact that we act for a long duration energy storage stock. Well, it's collapsed from $30 to $1.40. That is not very impressive. And the whole SPAC market in the US has completely collapsed. And as I say, luckily we didn't change our ways just because of a few silly voices. But long duration energy storage is still happening. The fact of the matter is it's a trend that is just not going away. Now, I know we obviously act for Infinity Energy Systems. A lot of people are getting very frustrated. They say there's not enough news, not enough things going on. They did announce this week, it was a rather strange announcement. They announced they appointed ES advisors in New York to help them with their US strategy. And they also said there's a bit of a US strategy change. Unfortunately, I was actually involved a little bit drafting that RNS, and various people said we couldn't say certain things. So, for instance, if you're about to get a listing in America, you're not apparently supposed to say you are until you've actually got it, which to me is a bit silly. Likewise, if you were about to say that, certain other things, they don't want you to say it. So what I would say in that RNS is read in a lot more than actually said. I probably can say that, I think. The other thing that I would say is, at the moment, most people are aware that debt around the world is going through the roof. I think I read something like it's $340 trillion global debt. It's crazy. But what I will tell you is that in California, they actually this year ran a $97 billion surplus. That's extraordinary.
Wow.
So California is awash with money. California wants energy storage. California actually wants non-lithium energy storage. The one issue, though, in California for our client is California wants to buy an American product backed by American investors for American users. So you've got to make your company look American. Actually, wasn't that sort of what the RNS was saying? Could have been. Anyway, there's another little clue for you. God, I'm giving away the clues today.
You are indeed.
You've got to read into a lot of my thinking, and a lot of my thinking is pretty wacky, but there you go. Now, there's a few little results and news bits out today, not a huge amount, but we've also, I've seen a couple of companies, I think you've seen a couple of companies, we may come on to that, but I saw Diploma had some pretty good interims. I don't know if you looked at them, Phil.
No, it didn't. All right, I confess, I missed Diploma. You spot some and I spot some. Come on, tell us about Diploma, Andrew, because it's seals and medical equipment and stuff. It's really good business, that.
Yeah, no, look, Diploma is a good business. I mean, I wouldn't say that I'm the world's expert on Diploma, but we have picked it up a few times actually on this podcast. Basically because it seemed to keep on delivering. Anyway, yeah, no, look, it had I've forgotten which day it was. It was one day this week anyway, and I think there were interims. But yeah, they're just sort of knocking in the numbers with sort of 20% plus growth. And it's a quality business, isn't it?
Yes, it is.
I don't think they're about to fall off a cliff. They seem to be able to keep it going.
Yeah, it's been listed for a good while, and to deliver in this environment is a very credible thing to be doing. But that's a good company.
And I'll tell you what, they had a 20% increase in the interim dividend, and the outlook positive and unchanged. So you can't ask for much more than that. So that was one that I saw out this week. Go on, your turn, and we'll go backwards and forwards on a few results.
Why not? I saw. Okay, so we talked about defence for obvious reasons, but you see, defence technology company Kinetic had its full year results. The ticker on that was its QQ.L. And look, the shares have had obviously a good rise, and not surprising. But what was quite interesting about this is just its general view of the defence sector, where it sees budgets going, and the part that it plays in it. But they, they'd seen an increase in their full year sales from about 1.278 billion up to 1.32 billion. The operating profit was down a bit. I'm not going into the detail on that specifically, but more importantly, they'd seen record order intake and high growth in Australia, but also in the UK. So look, it's a defence play, and I'm sure one to continue to look at in the current environment.
Yeah, well, actually, I'll be honest with you, I didn't spot that one. So my turn to pull one, and that actually the one I looked at was I think you pronounce it Eco. I may have got that wrong. I apologize if I have.
Mm-hmm.
Now it's been having a pretty torrid time, as have a lot of tech stocks. They've all come flying off. I actually picked this one up because it's in my mother's IHT portfolio. By the way, I haven't told her how her portfolio is performing at the moment because she's just coming up to her 90th birthday, and I don't want to upset her. But it's having a pretty tricky time. My poor old mother. Anyway, the whole objective is to avoid IHT, not to actually perform. But they did announce that they had a full year trading update. They said that their board expects revenue and profit for full year 23 to be significantly higher than full year 22, mainly because of the successful integration of Syntec, which was an acquisition they made. They do US secure payments, cloud stuff, all sorts of things, don't they? I don't really understand what it does, to be honest with you. You probably know it better than me. Did you see that one?
No.
Well, fun and games here, aren't we? The only thing they did say at the end of this very positive trading statement, they did say these expectations are subject to ongoing uncertainty in the macroeconomic climate, which pretty much every company is having to say. So anyway, well, there's another one. All right, your turn, Phil. You name one. See if I spot.
Gamma Communications.
Nope, didn't see that.
Right, okay. Well, that's why there are two of us on this podcast, Andrew. Gamma Communications at GAMA is a ticker 1.1 billion market cap. There's an AGM trading update. And Gamma provide high-speed data networks, including what are called SIP trunks, into offices and environments. They also do things like cloud-based comms, including PBX systems. So this is the switching systems that you have to switch between phones in offices. And they had an AGM trading update, and they've said that they're expecting sort of second half revenue growth of 10%. They've seen strong momentum for their cloud PBX in European business, and I guess that, also you've got to remember lots of folks are back in the office and using all those phones, and their tech, which is good. They've maintained their average revenue per unit in terms of sales, so it generally looked a pretty decent trading update, and the shares have been, and in this one, have been off since they reported interims in June. And I think part of the reason then was they'd made an acquisition in Germany that had mobile revenues, which were commission based at the time, and they were on a lower margin, and that affected group performance. So that didn't help the share price, but the shares have come off. And it's got 54 million in cash on the balance sheet, and it's on EV/EBITDA 10 times falling to 9 times. And they're forecasting the estimates. This is on Icon for 9% EPS growth. So want to keep an eye on, because it has a very broad client base, and it is office related comms. So it has come off. So worth keeping an eye on.
Well, I mean, all of these stocks basically come off Mars.
Yeah.
They're all starting to look really interesting. I mean, it's of course you can only buy stocks if you've got cash available. If you were fully invested when you went into this crash, then you bad luck. Two that I'll just comment on, which one I'm sure you saw, the other maybe not. But they're more sort of snippets. But I noticed that Nanico Group, which is fascinating, they're having this litigation against Samsung. They announced this week that the US Patent Trial and Appeal Board has ruled in favor of Nanico in respect to all 47 claims. Nanico at some stage are going to win. I mean, unfortunately, the stock price now is just a litigation bet. But I find that interesting. And then the other one, which I'm sure you saw today, which it was, I mean, I love the way they wrote this RNS, but it was Dark Trace.
Yes.
Statement in relation to recent media speculation.
Yes.
Dark Trace notes the recent share price movement and also media speculation about the company in relation to its civil proceedings in connection with the sale of autonomy. Neither Dark Trace nor any of its acting executives was a party to the civil proceedings. Neither Dark Trace nor its acting executives are the target of any investigation. We see no link between Dark Trace and the civil actions against Dr. Mike Lynch by Hewlett Packard or its subsidiaries. There's been no change to the prospect or trading of the business since our last update. Full stop. That told you, didn't it?
Well, it did. Yes, and the judge on their civil case was a 1,600-page finding. I thought, my word. Anyway,
that's nearly as long as the Johnny Depp Amber Heard case, or case number 3, isn't it? But I forget how many litigation or court cases they've done between the two of them. They just keep going back, don't they? It's like sort of Harry Potter or something. You have about 6 series or something, The Amber Heard Johnny Depp saga.
Yes, well, I'm sure they'll need more funding at some stage, Andrew. So there must be a role to play.
Well, they'll make a film of it all, won't they? And they can actually be the actors themselves.
Yeah.
Talking of films, by the way, are you looking forward to Top Gun coming out?
Yes, I am.
Oh, I'm so excited. I mean, it was Top Gun. The first Top Gun has to be one of my favourite films. Top Gun Maverick or Top Gun 2, whatever it's going to be called. God, I can't wait to go and see it. It's going to be fantastic. Sorry, we diversified there. Now, have you got any more results or anything you want to comment on, Phil?
We did. Other one I spotted this week was iDocs. iDocs is the ticket IDOX, 284 million market cap. First half results, a software company. I don't know if you've come across these guys before, but they provide software into the public sector. And this is for land, people planning is the way it's described, planning systems, election management software, but also, and I know this, they do engineering document management software for industry, including oil and gas and architecture, construction, mining. But they had a first half results, and their revenues were up 7%, 33 million, adjusted EBITDA of 11 million, and that was up 8%. And order intake up 7%. So actually, in given circumstances, nay bad. And I guess if they're providing their software into councils where spend has been under pressure for so long, we've forgotten how long it's been under pressure, and the spread of industries, that's probably a pretty good thing as well. It's pretty diversified.
Yeah, it's a stock that's been around for a while. It's been a pretty volatile stock, isn't it?
That's right. Yep, it has. Yeah,
okay. Has. Any others?
Yeah, do you know what? God, the messages in this market at the moment. This is for the chip industry. ST Microelectronics. They're a global major, and they, I know them. They provide silicon chips for the automotive markets, smartphone markets, mobile networks, cloud services. But they came out with just setting out sort of longer term goals, really. And it said that they came out with a midterm sales target, which was 30% increase from the top of range of its expectations for this year at 15 billion, and a longer range target of 20 billion by 2027. But it was a really sort of, a positive update. And how it was seen, particularly the electrification of automotive driving things for them. But they supply Apple and they supply Tesla, ST Microelectronics. Infineon as well, another chip maker, increased its guidance, albeit by €500 million to 13.5 billion. But it was an increase in guidance. And then Samsung And here's inflation for you. Samsung apparently are putting up their contract manufactured chips, ones that they make for other people, up by 20%. Yeah, and so on one hand, you're seeing sort of positive demand from these folks. So clearly, right now, they're seeing no lack of demand from their end customers, be it in the in the automotive space or mobile networking. So yeah, we shall see, and that's the key in all of this, isn't it, Andrew? Is to see where real demand is falling.
I think it will fall off a cliff, to be honest with you, Phil. I think
Yeah.
the summer is going to be, we're going to see quite a significant sudden switch. By the way, talking of goals, of course, Rangers could have done with another one last night, couldn't they?
Yes.
Anyway, hope there are no Rangers fans listening to this rather. We're only talking, we're not actually filming. I'll tell you what, I saw a couple of companies this week, one of which I saw with you. The one we saw together was actually a really interesting meeting, I've got to say. James Cropper. They're in closed period, so we unfortunately couldn't discuss anything that was, very up to date, shall we say. But it was very interesting catch up. A lot of people think James Cropper, family-owned business, making, smart paper, or should we call it like that? But, I learned an awful lot from that meeting, Phil. That business is changing really quite dramatically. Very impressed by the CEO, Phil Wild. But the sort of stuff they're doing with plastics, and particularly outer plastics rather than inner plastics that are completely reusable, the sort of recycling they're doing with all the McDonald's coffee cups and things like that is incredible. But also what they're doing in hydrogen, and their aim to get basically 50% of their business into, whether you want to call it, the green ESG space within a couple of years was very ambitious and impressive, wasn't it?
Yeah, I mean, the CRPR for investors is the ticker, and it's 110 million market cap. The company, I mean, this is I think the company is well over a century old, but formed by the Cropper family. It's always been,
the Cropper family still own about a third of the company.
Yeah, and and it's specialist. I mean, Andrew, it's specialist paper is at the sort of heart and foundation of it, and as you say, packaging and they're using, they are recycling the coffee cup recycling program and reusing that paper. And it is specialist paper for packaging, and as you pointed out, specialist packaging for drinks bottles. But paper is essentially a type of fibre, and they have highly specialised fibres that they've developed that use on the skins of wind turbines for lightning and static protection. They do composites for aerospace, and in the hydrogen markets, as you point out, there's the gas diffusion layer membranes, and they've publicly stated they've got about 50% of the of the fuel cell market for membranes, and of course electrolyzer membranes. It's an interesting business that's certainly changing shape.
You know what? I mean, it is. I mean, it's had a few sort of cautious moments, should we say, short term, but I suspect they're a pretty conservative company, aren't they? Yeah. I mean, look, as a stock, it had a fantastic run up, sort of 2009 to 2018, and since then has come back from sort of 2,000p to about 11,000p. I always get confused when I've got so many noughts. But I was really interested. I think we might. They're based up north, aren't they? The Lake District up north.
Yeah, that's right. Yeah.
Quite close to Scotland, I think. But I think we probably would go and visit them. I was really, really quite taken by what I heard.
Yeah, and companies, in tougher markets like this, companies that have weathered things, been around for a long time, adapted themselves to end markets, are always companies that are worth looking at.
I mean, the only problem is if you look at the volume traded today, it's 582 shares only. So it's not a highly liquid stock. And it's probably one of those stocks you have to buy and tuck away for 10 years. But I'm thinking of doing that.
Well,
the other one I saw actually this week rather, and I had a very long meeting with actually, was I met up with the CEO of IP Group. IP Group, I do own personally. I think it's a really interesting group. A lot of people still associate it annoyingly with the Woodford fiasco. Some people say, oh, it's all just Oxford Nanopore, which it isn't. But the stock, I bought it at 70p. I did actually tweet when it got to 140. I've just doubled my money. Should I sell it? Gosh, I listened to myself, though. And it's come all the way back down to about 80p. It's trading at a massive discount to its NAV, obviously because of what's happening in the macro environment.
Yeah.
Unfortunately, again, it was one of those conversations I can't really discuss a lot of what I was talking about. But for what it's worth, I do think it's an incredibly cheap stock at 78p. The one interesting conversation that I had, which was we were talking about ARM, the old FD of ARM used to be on the board of IP Group and is still very close to the company, and they've been in. And we were just talking about ARM and it's floating on NASDAQ. How disappointing it was that it was not floating in London. And I said to him, well, actually, the big mistake is that what they should have done is dual listed it on Aquis. It would only have cost, well, obviously the float hasn't actually happened yet, but that's what they should be suggesting. It would only be an additional de minimis amount of money, and it would mean that all UK shareholders could actually buy in, as well as it being on NASDAQ. And of course, Boris Johnson could stand up and say, yes, I got ARM back into the London market. But I don't think he'll do that. Boris hasn't heard of Aquis, I don't think. He'll probably go, Aquis, is that water? That's no good for Partygate, is it? Oh, that was a bit of a naughty one. Anyway, it was a very interesting meeting, and I think IP Group is very, very cheap. If you look at it on the chart, again, it's come off, obviously, because all of tech has come off. But it's back down on its lows, and I believe it should be bought.
There we are. Probably a good one to wrap up on there, Andrew, I think.
Yeah, because, I mean, there's actually not a lot of news, and the market's horrible, so... as usual, if anybody disagrees with our views, do tell us. We're always interested in the other side of the coin, because coins do have two sides. If anybody's got any questions, want to just get directly in touch with us. Hey, if anybody wants to sponsor us and pay us lots of money, feel free to get us in touch as well. No, that's a bit of a joke, really. We do it for free. We love it. Very good. And we will speak again next week, because I am now well and truly back in this country.
Excellent. Look forward to catching up next week, Andrew.